guys? Ego Complex, Crypto Cauldron. What happened last night? Oh, it's infuriating. So, if you were watching this last night, which most of the people in crypto were, we had a beautiful double top form right here. Look how, I mean, textbook double top. Here's my blue eyebrows for the double top. And we didn't get our drop, guys. You're supposed to get a drop. The length of the middle of the double top is your drop. That's about 1,000 points. You can trust me on it, or I can measure it for you real quick, depending where you want to go from the wick or whatnot, but about 1,000 points, okay? We didn't get anything. We got this white candle right here when this center line broke, which is this white candle breaking it. We watched it drive through the EMAs. You can see crushing the EMAs, wicks down, and it turns white instantly, and then mega pumps up, okay? That mega pump was insane. So, I mean, if you start the pump from down here, which you technically could because it's a white candle, but let's just do the one candle. The one candle was roughly 1,800 points in 18 minutes, okay, in one candle. Look at the volume on the MACD for that candle. Look at that tiny green little speck. It turned a bearish cross into a bullish cross. That tiny volume on the MACD blew that candle up. You can see you got the FOMO volume up here with people joining in, obviously. But that was absolutely mental to watch. And it was when I say it's a perfect setup, let me explain why it was a perfect setup. Because this is charting, right? And we're day traders here. We trade in our group. 4 days earlier, double top. And this one's ugly. Sloppy double top. Look at it. Anyways, this double top caused a 4,000 point decline, right? Just 4 days earlier. Let's just take it from here. Go up. Yeah, 36.29. 4 days earlier, we get a 4,000 point decline. Now, this was about 2 or 3 times the magnitude that a textbook double top would have caused, because this really should have just been about 1,000 points. Okay, we got almost 3 times, almost 4 times as much because of the fact that we are in a bear market. Shh, don't tell anybody. Don't tell anybody on YouTube. We're trading in a bear market. Since May 12th, when we fell into my descending triangle, it's a bear market, guys. And we're in a bearish trend within the bear market. You can have a bullish trend or bearish trend. Why are we in a bearish trend? Because we fell 35,157 here. This is that declination. Price fell down. Price crashed down to 30K. Price was rising back up, trying to get, you got to get above that 35 to reverse the current bear trend that we're in, the pattern within the pattern. Form a double top, called it out right about here in our group. I said, this is going to roll to a double top. Forms a double top, got to get a whale reversal, and then we're resting right on my descending triangle top, right? This is why shapes are important, guys. You can see price using this as support and as resistance, as witnessed here. Now, what you want to do here, this is a futures video. Everybody's asking, I got stopped out, myself included. Everybody got stopped out or liquidated, right? We got stopped out, and now we have to make some money back. We got to harpoon the whales. So everybody wants to know, where's the best entry point? 35K is what we're targeting. As I make this video, we're moving up towards it again. So pay attention to this. I'll get this published ASAP. We fell from 35. We tested it 4 days later. We got rejected, fell back down to support. So what price does goes to support. 35 is key. What I personally think will happen is we're going to test it, and then we're going to fall back down again. And we're going to be on our way back down towards the 20s again. Okay, it's going to take time, but we're going to go back down into the 20s. Now, if we for some reason are able to break it, just breaking 35, I'm only short-term bullish. Okay, let me tell you why I'm short-term bullish. Let me show you in the other time frame here. Short-term bullish because of this magic purple line descending. What is this purple line? Well, this purple line is a 200 moving average. Okay? 200 moving average is a very important number. But before I get into that, look at Ichi. We just now broke from the Ichi cloud. It's super accurate, Ichi. You gotta love Ichi. We're in this big, thick cloud. We just now broke. We're going to go back up to test that 35 like I said we would in my group. Let's shrink this down so you can see why the 200 moving average is important. If you're not using indicators, guys, you're missing things like the 200 moving average. This is very important to see. Why is it important? Because remember this, we tested this June 14th, June 15th for 2 days. I made a video on it. Video history on YouTube, guys, very important. Made a video on it. I said the longer we test this with the combination of Death Cross, this is going to drop us 10,000 points to 31K. This is at 41.5. I said it'll drop us to 31K, and with the combination of Death Cross, is going to push us into the high 20s. Have that in the video, right? This is when everybody on YouTube was saying we're going to break this, go to 50K, don't see any resistance, and then march on from there, 70K Bitcoin, bull run back on. Well, not in our room because we look at the facts. We don't go by emotions and hype. So what happened after we tested this for 2 days? Boom, we got rejected. We fell. We fell to 31K. And then you can see the 31K number, magic, right? And then we fell to 28,790, right? Fell further, just like I said it would in the video. Very important to know these things. This is because when you're looking at this, whether you're going to do futures or not, if we do break this 35 number, we have to fight the 200 again. This is a descending number. A trend line won't show you this. If you put a trend line right here, in a couple days it's going to be lower. In a couple days it's going to be lower. And your trend line is not going to move. So your trend line is not going to be accurate, okay? So this is a descending moving average. And we have to fight this again. If we get rejected again, this is like super confirmation of a bear market. Like nobody on YouTube should be talking about being in a bull market. The reason I'm saying this is, so we fell from 35, we got rejected by 35. Just hours later, we got rejected by, or 4 days later, we got rejected by 35 again. We now have, so now the retest, if we do break 35, we were at 41. You have to understand, your equity is contracting, okay? Your price of Bitcoin. We tested this at 41 and lost it. And now we're going to be testing it again. If we break 35, we're going to be testing it in that 35, 36, 37 level. So you're losing percentages of Bitcoin as you do this. The market's getting smaller. It's a bear market. The range is contracting. Okay, so you have to understand that if we test this, I don't think we're going to break 35, but if we do break 35 and get to the 200, I don't think we're breaking the 200. Now, if we do break the 200, and I'm wrong twice in a row, we then have to break this 42, 43K level because that reverses the next lower high, right? So you have to keep going up. You have to keep climbing. That gives you a bullish trend to climb. Because if you remember, look where we fell from. The reason it's a bear market, guys, May 12th. Look at that. So this is why I said long term I'm bearish, short term I can be bullish. You got to beat 35. You got to beat the 200 moving average at 36.9. Then you got to get above 42, 43K, which is going to be a ton of resistance right there because we spent 2 days there losing. Okay, that's a big resistance level. Now, if you get above all of that, then you can start looking. You get above that, you get above that, you get above the 35. Then you're climbing, okay? And then that's a bullish trend in a bear market, which is good. But as of right now, this is all bad. There's so much more to keep us down than there is to lift us up. So look for that rejection at 35. Let it test it. As soon as you see it getting rejected, that's a sign that we're going back down. Now you got to work your way all through the EMAs and everything. So make a wise decision about when to close your short. You can just close it when you're in money. You don't have to get 30%, 150% on shorts, guys. You can close it when you're profitable. And when you make that decision is when you hit support, right? If you hit support, if you keep it open, then you're taking a risk because it can refuel and try to 35 again. Now, if you break the 35, again, short-term bullish up to the 36.9 of the 200 moving average. If you beat the 36.9, then I'm short-term bullish up to that 41, 42, 43K level because you got to beat that. So you need to look at this in phases. I wouldn't suggest you keep a futures long open this whole time. You can with a tight stop loss. Obviously, if you get rejected, you don't want to lose your profit. What I would probably do is open a long if we beat 35, close it right before we hit resistance because I don't anticipate we're going to beat it. And then if we do beat it, open another one. There's nothing wrong with doing that. It ends up being just about the same money. So there's just different ways to trade futures. But let's harpoon these whales, guys. Make some money. Look at that 35K level, key resistance level right now. And it looks like we may end up testing it today. So let's see if we break it. Let's see if we fall from it. Either way, you can make money.